In this episode of Financial Control for Life, we're going to show you how you can scale and grow your business without taking on unnecessary risk. As a business owner, you're always focusing on ways to help get your business going and how to fund it. And at times it can be a challenge to think about, geez, you know what? I've got to get capital to expand my business, or I want to buy a business and I need money, or hey, there's an opportunity now that just came up to invest and I need money. So what happens when you see those opportunities? Well, they get exciting. And the amazing thing about dividend paying whole life is it creates an opportunity for actually to capture that opportunity and make it happen in your life. But a lot of us, including myself, with business funding is we have to end up going to a bank to try to get funding, or we got to go on a road show to kind of convince a venture capitalist to give us money. And it can be frustrating, and there's times where the opportunities in your life end up flying by you. So what we want to focus on is creating a funding source that always gives you opportunities when they do come. And if it is a right opportunity, you can take advantage of it and make it happen, which is so important. When looking at the overall cash flow of a business, when we do our strategy sessions, we look at first destructive expenses versus positive or productive. And it's a pretty cool process that a lot of our clients love to see, and they actually say it's quite an eye-opening experience to look at their actual expenses, not just from what their fiscal year-end statements show, but actually through spreadsheets and software and saying, okay, here's what is going out. So we like to identify the destructive expenses versus the productive expenses, and we like to identify leakage. For example, in my business, there's a software program that we may be paying that really isn't providing a lot of value in our life, that we just keep coming off our Visa card every month, and it's something you just don't notice, right? Because it's coming out monthly. Well, that's a destructive expense because we're not really utilizing the value of that software. We're better off canceling that software and redirecting that money into something else that's more productive. When we look at destructive expenses versus productive expenses, it's also focusing on being conscious about our spending when we analyze a business owner's cash flow is really what's going on with your money. Here's what's going out. What is your free money, which means what money is available or discretionary money that we can start utilizing to help build wealth or create those opportunities in the future that are so important to expand and grow your business. Obviously, we want to scale your business. So what happens to scale a business? Well, scaling a business, in my experience, is having the opportunities to know what your unique abilities are and to give up a lot of the control and to empower other people as assets, the human capital in your business to help it grow. And one of the big things we did in our business, Michelle and I, is we focused on bringing more people in. People that could do a job that was 75 or 80% just as good as me. And what that did is it allowed me to free up time for myself to do things that I'm passionate about to help grow the business. So that was a cool factor in terms of scalability and growing your money. Now, other ways of thinking about how to scale and expand your business is looking at the protective side of the business, which means if something happens to you and you're not able to go to work tomorrow, do you have something that's going to create a paycheck to still come into the business to keep it going? Or if something happened to a business partner, is there money to help decide what to do with the business? That's key, is you've got to have the right protective components to your business, meaning you've got to have the life insurance, you've got to have the disability insurance, you've got to have the critical illness, you've got to have the health and welfare trust in your business, you've got to have a savings vehicle, a bunker for scary times ahead, which means a forced savings vehicle, so you know you're always storing capital for things that can go off the rails at times in the future. So that's a key component when you're thinking about how to scale your business. So as business owners, when you're thinking about scalability, you're really thinking about risk. And it's sexier to go out and think about getting new things in place for your business to grow it. And we're not interested more in the protective side, but it's the protective side, it's key in order for you to take those risks in the future, because now you set yourself up to have the protection. So if something did go wrong, you can keep doing what you love to do. That sexier thing is still there because now you have the protective side in place. We're going to make sure holistically that you have the right protection in place, that we're not overpaying on insurance premiums, so we do that full analysis, because remember, the leakage was key. So if you can free up cash flow because of leakage, destructive expenses, then that's more cash to help grow the business and expand it. When you think about scaling your business, it's important to obviously think about the fun things, the things that you want to create to scale that business, but it's just as important and really critical to focus on the protective side. So the protective side is going to help us set ourselves up to take on those new opportunities to expand that business and grow it the way you want to grow it and live the life you love. And by doing that, it allows you to create financial control for life.